Okay, guys, good evening. Hope your 4th of July holiday is nice. Let's jump in here to GDX and GDXY. All right. Let's sum up what they did. A couple of things. They bought back, whoops, this is 106. Well, yeah, they bought back 160 contracts. Well, wait a minute. Yeah, they had shares purchased. Sorry, guys. Just trying to orient myself. I did all the work and now I have to get it together here. So what happened with GDX? It went up from 3402 to 3528. So it's breaking out on the chart. I'll show you that later in the weeklies, but I'm looking for a confirmation on Friday because sometimes you get these fake breakouts, even a couple of days, and then it just goes back into the channel. So I never overreact, right? I've done that a few times in trading and positions. Granted, I know you guys are looking at it as an income fund, but I not only do the income fund, I do a lot of other purchases and options on individual components since the GDX is just one way to play this bull market in the metals and miners. So what did GDXY do? Well, we went up 1.32. The problem was, and that's where I'm trying to clear up this, we had 1,790 contracts. Okay, so we closed those out in the sense that we had run by them, right? They were 34 and a half, and we were looking to win all that money on the weeklies, but all of a sudden GDX took off with the metals prices doing nicely. So they ran right by that up to in the 35.50 range, and then we closed back a little bit at 35.28. So what the fund manager did was they bought back all of those, right? So that caused a loss there. So the loss was 91,000 because they had written them for 59,000, right? They got 33 cents. Well, they had to pay 84 cents to close out that position. Okay. And then they additionally went out. This was a confusion. And they put on 1950. So that is the accurate number. But they only bought back 1790 here, right? But with the buy-in to the fund of 50,000 shares, they used that cash to add additional synthetics and to put on this position, right? So that's what transpired here is they closed out this and made it kind of a loser because they saw it getting run by and they see the breakout on the chart. So they basically put 160, or sorry, they put 1950, but the 160 is the difference in these two. So let's go out and look at the synthetic. They've had the same synthetic all along, right? So they're up to, 1950 on that as well. And that only required them to put on 160. So sorry about the confusion on that. They added the 160 too because they got money in to the 1790. So as far as the synthetic went, that's all they added, right? So that put an additional 40,640 in the piggy bank. These are the various because, as you know, GDX just paid, but they had a little bit of May activity, then they had a little bit of June activity, and then now in July, I start the new accounting cycle on the 3rd, typically on the declaration date. So they're still looking at a 719, so they'll be rolling that maybe the end of next week or in the week of 719, and they'll go out probably to a September date. So that's what the confusion around that is. So let's go back to the sheet. So they had to take the new 160 along with the 1790 money and write a total of 1950, and they went out to the week of 712 and they chose 36. Okay. So there's where that money shows up. So all of a sudden, whoops, you see the cash come into the account. Look how long they've been at 325. I always say this, since 6/4, right? Almost a month. So, when it's an unloved sector, who wants to buy a fund that's sitting there and boring? Well, all of a sudden it breaks out and people say, hey, that's a $18, NAV price. It's gone down, but geez, maybe, that paid 80 cents. So that was a 50%. I forget the exact number, but I think it was 57 because I took it off in the payouts. Yeah, once it's been paid, I just remove it. But you can go back and look at the announcement and see what it was. So anyway, let's take a look at the holdings. Well, did I update this? No, and this will make things nicer. Sorry about that, guys. There's just a lot when you go to a new accounting page, right? You put a July in, everything changes. So this will get updated right now. So the 38 is showing 0.195. So you notice a nice bump, right, in our synthetic loss. So we were going from a 691 down to a 511 just by that movement. What I'll do later, I don't want to bore you guys with it, I'll drag all these columns and update the dates. And again, this is going to show, this needs to be a July, reference that. And then I also need to make that further down in July. There we go. So even this number, even though the share count is updated, the assets aren't updated. So a couple of these things I need to do right now so you guys can see uh, how this is all calculated, right? I've automated it the best I can. So what's the delta here? So the actual close was 1923 and the assets are saying it's only worth 1848. Guess what, guys? This is the ex-dividend. Take the 79.78 or basically 80 cents out, right? And that would give you 1843. So we're undervalued by 5 cents based on the NAV. So that'll clear up. Sometimes I write down here on that date, but then you're writing something, you got to turn around and erase it. So we're looking better. We've lowered and if this breakout is for real, then we'll be doing nicely. Awesome. So let me jump over and show you. So I don't care too much about the cash. I told you they added that. We're looking good. Now, this one goes away, right? Because we lost money on this guy. And let's update the close on this one based on what we paid. And so I want the payment is in July. Okay, and that tells us right now that's 39 cents. And I think we captured 35. I'll fix that. So we're about 4 cents behind on that. Let's update. So I got 19.5, yeah, and I got 2816. So this is totally accurate. We've lowered that almost 200,000 people. So that's looking pretty good. This one is still a little bit out of the money. Yeah, there we go. So it's 11%. Um, but I don't even worry about that. We'll get our act together on that. Again, so the key, let me go over and show you. So on the weekly, we now have one, right? I never like that. I like it when they ladder these things and they give us a couple. But if money should flow on this fund, and it's very likely if this breakout continues, then they'll have an opportunity to ladder some of these and have different strike prices. So you can see here on the chart, right? I put a brand new chart in because it's relevant when we're down here. There's not much reason to update it. So I want to see us stay above 34. If we turn around and go back into this lower channel, it invalidates. We call that a false breakout. So you want at least one more day, and you prefer that it stay up above 35, but as long as it stays below or about the 34 line, that's considered, confirmation. So, we're losing 11% of our weeklies, but that's no big deal. There'll be more money flowing in here. Let's look at payouts, guys. I'll make this quick because it's a holiday. So, we have a situation where we're collecting a little bit of money already, right? We wrote something positive, and as we get up closer to that 38, that put value is going to start making money. But again, it's 719, so they could roll next week. More than likely, they'll just wait to the week of 719. So I think all is good in the gold and silver and GDX world through GDXY. Again, you guys all know I'm very, very bullish on this sector, and I'll try to do more here because I have an immense amount of knowledge of exactly how this sector plays out. And what I mean by that is how it goes from large cap to mid cap to explorers, from gold to silver to platinum to palladium, and how the different metals and miners. So right now, your silver miners are grossly undervalued. If And also the large caps get all the institutional money, which is GDX. So in a way, I think YieldMax was smart to have this, but I have some interviews coming up with some other fund managers, so I'll be asking them about their plans for, precious metals and commodity oriented and energy oriented ETFs. So a lot more to share with you guys in time. All right, have a great holiday. I'll let you go. Again, this is Bruce from Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Have a great one. See ya. Bye.